In this video, we'll go over the top 3 helpful strategies for 2025. These are easy to understand and any beginner can follow them. They're easy to use, have simple entry points, and most importantly, the settings are straightforward. We'll go through all the settings and all the entry points, so after this video, you'll really be able to repeat each strategy, add it to your trader's toolkit, and as a result, trade profitably. Let's take a look at the result of the first trade. This is the first strategy, where we'll be using the super trend indicator. It has very simple entry points, basically following the trend and bouncing off the line. We'll break all of this down next. An excellent first trade brings me $500. Let's move on to all the entry points and how to work with this strategy. Look, we need to use a very simple and straightforward setup for this process. We go to the indicator section and select the super trend indicator from the available list. Next, we need to carefully configure it to suit our needs. Set these parameters 15 and 1.48. For the style, set 2 lines at 2 pixels each. Our indicator is now fully set up. So how do we use it? We identify a certain movement. It'll either be a downward movement or an upward movement. So only in these 2 cases will we proceed. If we have a downward movement, we'll only open sell trades. We need to wait patiently until the price actually touches our predetermined boundary level. And from that specific boundary, particularly when we are looking for a sell opportunity, we will proceed to open sell trades. Yes, there are breakouts and reversals that can occur, but if we carefully look at the statistics, this strategy consistently brings about 7 out of every 10 trades that are profitable. Regarding the settings, we set 15-second candles and set the trade duration to 1 minute. Our strategy is ready. Let's look at another example, Euro/Japanese yen. Right now, we only have sell trades, and that's something to keep in mind. Sometimes the market doesn't give any opposite movements. I see a downward trend, and I'm watching this line. What we're interested in during a downtrend is the sell level. If we get an upward movement, we'll work the same way, but for buys. In other words, only trading with the trend. We'll trade when the price touches the buy level. So my price touches this line, I open a sell trade on a strong impulse, and now I just need to wait for the profit. That's all I need to do. Great, the second trade brings me another $400 in profit. Let's take a look at the second strategy, which has even more advantages. But first, I want to remind you, if you don't know how to use the strategies, or if you have any questions at all, you can always reach out to our support account. Our dedicated team will help you and answer all your questions in detail. You can also get personal mentorship and guidance tailored specifically to your needs. All you need to do is send us a direct message and we'll provide you with a comprehensive step-by-step manual on exactly how you can make money in trading. We'll carefully assess your current level, figure out which tools and strategies suit you best, which ones you should skip for now, and you'll be able to work together with us as part of our community. We have a pretty large team of professional traders with solid, proven experience who are ready to share their knowledge and expertise with you. So if you want mentorship, if you want to get useful tools, resources, and advice from us, write to us using the link in the description. There will be a link to the support account. Just message there whether you want a personal review, training, or mentorship. The link is in the description below. Now, let's move on. Look, the next strategy is going to be about working from key levels in the market. We're not just talking about any level, but a truly significant key level. So if we look at the big picture, for example, if the price dropped sharply, like there was this kind of strong impulse, that's what we're interested in. We see that there was a first bounce, a second, a third bounce, so this is potentially a good level. Then we look here, there were also some bounces, so we can assume that the price will come back to this boundary and get a sharp impulse. As we can see, right now the movement is a whole 20 points. The most important thing is that we need to find exactly the key level, not just one somewhere in the middle, like here or here for example. It should be either at the top or at the bottom, meaning at the very end of the movement. Here we had a downward movement like this, and we can see that the price was being held from below. The level is exactly where we can work from. How does this actually happen, and why does it happen this way? Look, for example, we have a downward movement, and at some point there are large buyers here who have placed buy orders, meaning pending orders. These are the same buy orders, just set to trigger later, or when the price reaches a certain point. So when we get here, these orders are triggered and we see an impulsive wave of buying. As a result, the price shoots up. just like it did in this trade. Last time we also got an impulse, and on the second touch we got another impulse. But for all this to work, we need to set the 30-second candle. Let's set all this up. Now we're ready to get to work. The most important thing is to find the key level. So you can zoom out the chart like this and immediately see where the key levels are. So in fact, if we look at the history, we can see that the level we marked keeps working for us over and over. Let's see how we can actually find this. The ideal example, of course, is when we find this kind of sideways movement, mark one level at the bottom, and then start adjusting it from there. So you look at where there were the most touches, for example here, or maybe lower. I see that there were the most touches right here. That's it, this is my key level. Next, I mark the top, since there were more touches there. Now, what do we have? Just look at how many profitable entry points we had. Yes, of course, we did have some losing moves, but that's very, very rare, mostly when there was a strong impulse. But if you look at these levels, they always gave a good reaction, and the statistics for this strategy already show 85% profitable trades. So if the previous one was 70%, this one's already 85%. One of the advantages is that we have fairly safe impulse moves that are easy to profit from. On the downside, we have very few of these entry points, and you need to know the levels. You really need to practice, search for them, and then they'll work. So when you practice and know where to find these levels, for example, we also have a key level below. They tend to shift either slightly higher or somewhat lower. In these simple upward movements, we typically won't find that kind of move here. That's why I recommend using the super trend here. If we just take a closer look at this kind of sideways movement in the market, that's exactly where our most important key levels will be found, both below and above. I hope that's clear, so let's move on to the third strategy. But before the third strategy, let me remind you that we also have a Telegram channel. In addition to our signature mentoring and comprehensive training, you can also find a wealth of free information there, where you can further practice and learn even more about trading. Additionally, we also provide a completely free signal. So if you want more ready-made information that will help you grow as a trader and help you learn, explore this field and make trades like these, then follow the link in the description and subscribe to our Telegram channel. It's free, and we really try to share genuinely useful information that will help you. There are also ready-made strategies and indicators here. So if you want to get involved and grow, the link to the Telegram channel is in the description. The third strategy will be on TradingView. So you'll need this website. You don't have to buy a paid subscription. The free version is enough. You just need to sign in. Look, here will be the most simple strategy where everything will be immediately clear, but we'll have very few entry points. However, we'll close almost 90% of trades in profit. To make sure everything works perfectly, you need to type volume profile in the search here, and then right here we have volume profile fixed range. We add this indicator to the chart, and now we need to tweak it a bit. So you should set the following settings, 160 and 8. With these settings, it will be comfortable to work. As for the time frame, we'll be working on the 1 minute chart. So right here in the time frame, just select 1 minute. You select it and that's it, you're all set. On pocket option, it doesn't matter what time interval you use. You can go with 30 seconds, 1 minute, or even 15 seconds. It really doesn't make a difference here. By the way, the previous two strategies only worked on the 1 minute time frame. Here, we can work with time frames from 1 to 3 minutes. Right now, the market is pretty volatile, so let's try to work with 1 minute. Right here, we can open our trade to sell. Why is that? Because the main volume, the largest volume, was right down here, and that volume is going to pull the price toward it. So you could say this is the main accumulation zone. See, there's movement, then accumulation, so the price will be drawn here. This is where the main buyers and sellers are sitting. If the price moves out a bit and you see it starting to approach this area, you can confidently open a trade in that direction. The farther the price is from the volume, for example here, the longer you can open a trade for. At the very top, for instance, right here, we could open a trade for 3 minutes and accordingly be confident in the movement. But here, when the price is already starting to approach this movement, I don't recommend opening trades for 3 minutes. It's better to open it for 1 minute instead, and accordingly, grab a quick, small, confident movement. So remember, large volumes will attract the price. By the way, I'm choosing plus 500 bucks. So once again, look, we have a base and the price always breaks out from it, but it will always return to it. Accordingly, the further the price is from the main volume, the longer the time frame we can use. For example, we can open a trade for 3 minutes. If the price is already close to this volume, then we go for 1 minute. If you're unsure about a certain volume, like here, where there was also a pretty big volume, just skip that trade. By the way, as you can see, the price really does come back to this accumulation zone. So here's another example. You see, the price is within this volume. If we draw a boundary, a range like this, the price always broke out, but immediately returned. So we're trading on the return to this boundary, and this is the safest strategy at the junction, which will give you 90% positive results. Done. You can pick any currency pair like this, and you'll see that the price really does always return to this zone. Yes, sometimes we do get structure breaks when the price goes higher somewhere, but as soon as it comes back to this zone, that's it. We start to see this sideways movement. Right now, even if the price breaks out, it'll still come back soon. That's just how the market works. A large volume always pulls things in, kind of like a black hole, you could say. Write in the comments which strategy you liked. Also, let me remind you that you can follow the links in the description to join our community, where you'll find even more useful information. We can also help you with personal mentoring and tailor tools specifically for you. So follow the link in the description, join our team, and start trading with us. Links are in the description, and I'm waiting to hear in the comments which strategy you liked. Also, let me remind you that there's currently a contest for $500 for comments, and we'll pick the winners in our Telegram channel. So check out the links in the description. See you then.